Hello, I'm Adrian from Hallcroft Finance, and you should have just received a blank template like this that you can see on the screen at the moment, which will be in an Excel format. This is our go-to place when we're looking at development funding for projects from £1 million, even £500,000, all the way up to deals that we've done in the £250 million plus bracket. Majority of our business is in the SME market. And this deal that we're going to have a quick look at today, which is on the open market, or was on the open market the last time I looked, this is just something that came into our inbox, had a look at the opportunity, and we thought we'd use this as a bit of a test case. So as you can see, pretty rough looking office building, typical sort of stock that you'd see in North London. It's received consent to convert it into residential apartments. And as you can see here, proposed developments, the consent provides for a total of 38 apartments with the unit mix set out as below. So we've got 27 one-bedroom apartments and 11 two-bed apartments. Now, what we have done, I've uploaded this already, so this won't be the format that you'll see it in. Yours will be blank, but you can go in and you can play around with it. And what I want to look at is really just try and figure out as quickly as possible what I believe the offer price should be. And we do this a lot with our clients when they're looking at transactions. So as you can see, working here from the top, I've gone with an average of £850 per square foot. You can see here 18,008 square feet. If I just cross-reference that, 18,008 square feet is the total square footage that we have available to us. There is a little bit of hope value in this site because they are talking about getting residential consent in the car park as well. But for the moment, I'm just going to concentrate on what I believe the site is worth. So I've gone with an average of £850 per square foot. Had a quick look on Rightmove. Nothing really scientific. I would dig deeper into those numbers as I go. Residential, therefore, gives us just over £15 million. And just to give you an idea, capital values on a one-bed apartment in that area average 350, two-bed apartments average 500k, and that fits with this £15 million as well. We've got some exit fees here with banks. We've got a bank exit fee. We've got agents. They do well out of this. And we've got legals. Obviously, we'll pay our lawyers in this. And I've got averages, but you want to have a look at those. We've got no commercial space on this building. It's all been converted to residential, so we can ignore this position here. I'm going to jump straight into the build costs. So I've made some certain assumptions here. Again, you can see the 18,008 square feet. I've averaged that at £190 per square foot. We've all heard recently about how build costs are actually going through the roof and the lack of availability for contractors, and stock and inventory is quite difficult to come across. The document that we've seen here gives us an idea of what the SIL payment is. Section 106, £4,246. I've entered that in there. And I've gone with a straight 7.5% of construction amount as our professional fees. I've then worked out interest, which is a little bit further down here. I've done it over a 24-month term, 15 months to convert it into residential, and I've given it a 9-month term for selling. And there'll be a bit of crossover in that as you go. And as you can see here, that works it out. Based on a 7% interest, you can change all of this as you go. Gives you £1,030,000 of interest, which you can see rolled up here. I then work it back to see, I add in some upfront costs, stamp duty, client legals, bank legals, valuation, initial QS report, and of course, arrangement fees. And that gives me my residual figure of £7 million. That is in line with what I would consider to be the market norm, which is 21% return on cost. Now, our focus here is return on equity. We would raise a debt amount. We've gone with an assumption here of 60% loan to GDV, leaving an equity requirement of £3 million to go into the deal. That equity requirement against the profit, which we can see here, gives you an 86% return on equity, non-annualized. That needs to be made clear. And as you can see above here, this is a mezzanine box. It gives you a bit more detail, which reduces the client's legal costs, equity costs, and of course increases the return on equity so long as you deliver in time and on budget. That's all from me. Hope this helps.